Good morning, everyone, and you're very welcome to today's webinar. So just before we get started with today's webinar, I want to introduce ourselves. So my name is Rachel Hines, and I'm the Marketing Manager here at Thesaurus Software. And we're delighted to be joined by Revenue for this webinar. And today we're joined by Colette Hayden, who is Assistant Principal in the Medium Enterprises Division at Revenue. During today's webinar, Colette will give us a quick update on where we are now with the EWSS and what changes are on the way. After Colette's presentation, I'll be jumping back on again to talk to you through our new integration with Modulr to streamline the payroll process. And finally, at the end of the webinar, we will have a questions and answers session where we will try to get through as many questions as possible. If you have any questions, you can type them into the questions box on your control panel at the side of the screen. And bear in mind that we do have a lot of people logged on at the moment, so we won't have a chance to answer every single question. This webinar is being recorded, and all attendees will receive an email later today with a link to the recording, so it's no problem if you do need to leave at any stage. Also in the email later today, there will be a copy of the presentation slides that we are using today, or you can also download the slides right now if you wish on the Handouts tab on your control panel. We will also include some useful documents and additional resources that you may find helpful in the email later today. So I'm now going to pass you over to Colette to kick us off with the revenue presentation.
Thank you, Rachel. My name is Colette Hayden, and I'm going to talk to you today about the main features of the Employment Wage Subsidy Scheme, EWSS, effective from the 1st of November 2021, which includes the changes to the scheme announced in the budget last month. This presentation is based on the position as of today, and things do change, so you should consult our website. The next slide, for your information, outlines the rates of subsidy payable for each employee for pay dates up to the 30th of November 2021, which range from €203 per week to €350 per week, but no subsidy is payable if an employee is paid less than €151.50 per week or more than €1,462 per week. Announced in the budget for your information on this next slide, it outlines the rates of subsidy payable for each employee from the 1st of December 2021 to the 28th of February 2022, which range from €151.50 to €203 per week. No subsidy is payable if an employee is paid less than €151.50 or more than €1,462 per week. The scheme is not open to new applicants after the 31st of December 2021. Also announced in the budget in this next slide, it outlines the rates of subsidy payable for each employee from the 1st of March 2022 to the 30th of April 2022, which is €100 per week. As you can see, no subsidy is payable if an employee is paid less than €151.50 per week or more than €1,462 per week. Please also note the reduced rate of employer PRSI of 0.5% on wages ceases also on the 28th of February 2022, and EWSS ceases on the 30th of April 2022. Next slide. As you are aware, to be eligible, an employer must experience a 30% reduction in turnover or customer order values as a result of COVID-19. For pay dates on or between the 1st of January and the 31st of December 2021, this 30% test is assessed by comparing turnover or customer order values for the calendar year 2021 to the calendar year 2019. The Employment Wage Subsidy Scheme has been extended in the budget to the 30th of April 2022. Now an employer must be able to demonstrate to the satisfaction of revenue that their business is expected to experience a 30% reduction in customer orders or turnover for the period 1 January 2021 to the 31st of December 2021 for pay dates on or between the 1st of July 2021 to the 30th of April 2022. Any employer that continues to hold a tax clearance for the duration of the scheme, is registered for and has received payments under the scheme, and meets the qualifying criteria for the reduction in turnover or customer orders at the end of 2021 will continue to qualify for support payments to the 30th of April 2022, unless they choose to voluntarily opt out of the scheme. Moving on to the next slide. If the business was not in operation on the 1st of January 2019, the comparative period is the period from the date of commencement to the 31st of December 2019. If the business commenced to trade on or after the 1st of November 2019, the review is based on the projected turnover or customer orders from the 1st of January 2021 or the date of commencement if later to the 31st of December 2021, prepared as if COVID-19 had not occurred. Next slide. Just a quick recap on some of the key features of the Employment Wage Subsidy Scheme, EWSS. EWSS could be claimed by eligible employers in respect of eligible employees from the 1st of September 2020. The subsidy is a flat rate subsidy which is paid on an employee's gross weekly pay, and this will be covered in more detail in later slides. EWSS is operated through normal payroll and taxation systems, so employers will be required to continue to operate payroll taxes in real time on all gross payments being made to their employees. An employer should register, deregister or re-register through ROSS on My Services page, click Manage Tax Registrations in the Other Services section, then click Register or Deregister next to the EWSS. As registration and re-registration cannot be backdated, it's important an employer is registered before the pay dates they want to claim in respect of. Employer and employee eligibility and tax clearance will be covered in the next few slides, but a key point, the employer must have a tax clearance to register for EWSS and must retain tax clearance to continue to receive subsidies. In line with international practice, a list of employers availing of EWSS was first published in January 2021 and will continue to be published quarterly on www.revenue.ie. In relation to employers' PRSI, while employers are required to report and pay the full rate of employer and employee PRSI on receipt of payroll submissions, Revenue will continue to apply the reduced rate of employer PRSI of 0.5% in respect of employees for whom a subsidy is payable up to the 28th of February 2022. Employers' monthly liabilities will be revised accordingly, and any resulting PRSI credit will be available for offset against future employer PRSI liabilities only until the 28th of February 2022. There are safeguards to minimise abuse of the system, and I will talk further about those later. Since the 21st of July 2021, all employers are required to complete and submit through ROSS an online monthly EWSS eligibility review form. Employers must undertake this review on a rolling monthly basis, comparing the actual and projected business performance up to and including December 2021. But more about this later on. Next slide. The subsidy is based on an employee's gross weekly wage. The gross wage includes notional pay before the deductions of pensions or salary sacrifice, but excludes any Department of Social Protection benefits which employees have mandated to be paid to the employer, such as illness, maternity, adoptive. Where a pay frequency is other than weekly, and the employer will calculate the gross weekly wage and divide by the number of insurable weeks to a maximum set by the system, and there is very good information on this in the EWSS guidance document. If employers are found to manipulate the system by changing pay frequencies, pay dates, or altering amounts to maximise subsidy, they will be liable to recoupment of the subsidy received together with interest, penalties, and possible complete exclusion from the scheme. EWSS is part of the normal payroll process for PRSI and PAYE, and deductions with payroll being taxed in the live environment. The EWSS indicator involves populating the other payments field on the payroll submission with a value between 0 and 1 to indicate the subsidy request. This will not appear on an employee's payslip. Subsidies will generally be paid within 2 working days with some minor delays at the start of each month. Where there are multiple employments, each eligible employer makes a claim for the subsidy in their own right for the eligible employee. Moving on now to the next slide, employers must undertake a review of their eligibility for the scheme on the last day of every month until and including December 2021 to be satisfied whether they continue to still meet the above eligibility criteria and to not take the necessary action of withdrawing from the scheme where they do not. By the 15th of every subsequent month, up to and including the 15th of January 2022, employers will need to provide details of the actual results for the previous month, together with reviewing the original projections provided to ensure they remain valid. If, as a result of undertaking that assessment, they determine they are no longer eligible, they should deregister on ROSS from the first of the following month and cease submitting EWSS claims. However, if circumstances subsequently change and employers are again eligible, they need to re-register on ROSS before the pay date in respect of which a claim is being made. It's worth reminding everyone that re-registrations and registrations cannot be backdated, so please ensure you are registered before you make wage payments. To assist employers with undertaking this eligibility review, a requirement has now been put in place whereby employers are required to complete and submit through ROSS an eligibility review form. Moving on to the next slide, I will now show you a few screens and explain the steps in submitting this initial claim form. The final screens may differ ever so slightly with those that I'm using for this demonstration. The first step in the process is to log on to ROSS and select EWSS Eligibility Review in the Employer Services section of My Frequently Used Services. Turning now to the next slide, you will then have to select from 3 options seen on screen. Number 1 is New Business. This is to be selected if you have commenced to trade on or after the 1st of November 2019. Number 2 is Registered Childcare Provider. This is to be selected if you are a childcare provider registered under Section 58C of the Childcare Act 1991. And number 3 is All Others. However, for employers with more than one business type within the 3 categories listed at the initial stage of the ERF completion, that is a new business, registered childcare provider or all others, employers should complete in respect of all others where they fit into the all others category, as well as one of the other 2 categories. They should ignore the registered childcare business or new business which commenced after the 1st of November 2019. Where employers have a number of eligible business, one ERF should be completed with details of all eligible businesses included. Moving on to the next slide. For those that select new business, that is those that commence to trade on or after the 1st of November 2019, employers need to agree to the following declaration by ticking the agreement box. I declare that I have correctly completed this form, which exempts me from completion of the monthly employer eligibility review screens. For new businesses to qualify for EWSS, that is an employer that commenced to trade after the 1st of November 2019 must, in addition to having a tax clearance for the duration of the scheme, they must be able to demonstrate that the business experienced a minimum 30% reduction in the projected turnover, VAT exclusive, or customer orders for the 1st of January 2021, or the date of commencement, if later, to the 31st of December 2021, as if the pandemic had not occurred, relative to actuals and projections for the same period, looking at a year as a whole rather than on a monthly basis, and to be able to confirm that this disruption is caused by COVID-19. Again, a similar step is required for registered childcare providers, and they're also required to agree to the same declaration. Moving on to the next slide. Step 4 for both new business and childcare providers sees employers being directed to the sign and submit section of ROSS, where they will be directed to confirm their submission using their digital certificate. They will then receive an acknowledgement for their submission for their records, and we have contacted all new employers via ROSS advising of them of the need to retain the monthly eligibility review documentation, and that we will be undertaking compliance checks with a number of them in due course. Moving on now to the next slide, in relation to all others, there's a bit more involved as you would expect. Turning now to step 3.1, next slide, in the initial submission, employers are required to provide details of their actual monthly turnover or customer order values for 2019. Please ensure this is completed correctly, as once submitted, which is step 4 of the process, it cannot be altered. If errors were made while completing the form, employers should contact us through My Inquiries, setting out the reasons why an amendment is required. The next screen you are directed to requires actual monthly turnover or customer order values for January to October 2021. Again, this screen cannot be altered once submitted. If errors were made while completing the form, please contact us through My Inquiries, setting out the reasons why an amendment is required. In the next screen, you will see this screen pop up. Revenue undertakes a systematic check comparing 2019 actuals with 2021 actuals. If you meet the 30% reduction, you will see the screen shown with your figures as submitted. However, in the next screen, if you don't meet the 30% reduction, you will see the screen shown. You will see the notification in red. You are no longer eligible for EWSS. Please sign and submit this form, then deregister and stop submitting EWSS claims. Any claims incorrectly submitted after an ERF which shows 30% rule was broken will not be paid. Finally, in step 4, the next slide, once completed, an employers will be required to sign and submit after agreeing to the following declaration, which is included in the final screen by ticking the highlighted box. I declare that this represents a true and accurate record of actual monthly turnover, customer orders, and my best estimate of forward-looking monthly turnover, customer order projections. At this stage, employers will be directed to confirm their application with their digital certificate. They will receive an acknowledgement for the submission of their records. If employers do not file the monthly declarations, they will see a suspension of their EWSS claims, so it's an imperative that this is given your immediate attention. Turning now to the next screen. When completing your monthly returns, you should log on to ROSS and select EWSS Eligibility Review in the Employer Services section of My Frequently Used Services. In the next screen, you will see, by the 15th of every month for the remainder of 2021, employers are required to provide details of their actual turnover for the previous month and ensure their projected monthly November actual values with projections for December 2021. Next month, by the 15th of January 2022, you will be completing the December 2021 actual values. It is expected that projections for December 2021 have been prepared using a reliable set of budget assumptions and will not change materially between monthly updates. Again, please take care when completing this screen, as amendments cannot be made once figures are submitted, other than projections for future months if necessary. If errors were made when they were provided in a previous month, contact should be made through My Inquiries, setting out the reason for the amendment. It is important to highlight, if employers do not file the monthly declarations, they will see a suspension of their EWSS claims, so it's imperative that this is given your attention. Moving on now to step 3, the next slide. Revenue undertakes again a systematic check comparing 2019 actuals with 2021 actuals and projections. If you meet the 30% reduction, you will see the screen below with your figures as submitted. In the next slide, if you don't meet the 30% reduction, you will see the screen shown. You should sign and submit the form at step 4 and then deregister for EWSS and stop submitting EWSS claims. Any subsequent claims submitted will not be paid. Finally, in the next slide, the sign and submission after agreeing the declaration included in the final scheme, I declare that this represents a true record of actual monthly turnover or customer orders and my best estimate of forward-looking monthly turnover or customer order projections. Moving on, to the next slide, just to recap. It has been designed to be an aid to employers to ensure they remain eligible and avoid a potential for subsidies being claimed in error and potential repayment issues arising. Employers need to ensure figures are completed net of VAT. We undertake real-time reviews of ERFs and make contact with employers where discrepancies arise, including where employers complete nil for some periods or where they dampen down projections as the year progresses, as actuals for earlier months are higher than originally expected. I would just like to remind you that you need to file your ERFs to avoid delays in payment. Firstly, employers need to ensure they file their ERFs by the 15th of each month. The initial ERF completed concludes actuals for each month in 2019 and from January to October 2021, and projections for November-December 2021. We continue to see a large number of employers who are not complying with this requirement. We also continue to see employers continuing to submit EWSS claims even though they do not meet the 30% test, and their ERF filed has highlighted this and requested that they deregister and cease submitting claims. I would also like to remind employers of the requirement to maintain a tax clearance throughout the term of the scheme to ensure timely payment. Finally, registration and re-registration cannot be backdated, so employers need to ensure they are registered prior to the payment and submission date in respect of the month in which they are claiming EWSS or submitting their ERF. Moving on now to debt warehousing in the next slide. Finally, from the 1st of June 2021, employers can now warehouse overpayments of EWSS, which they are unable to repay as a result of the impact of COVID-19 restrictions. Period 1 of the warehousing period ends on the 31st of December 2021. Period 2 runs from the 1st of January 2022 to the 31st of December 2022. An interest rate of 0% applies to warehouse debts in period 1 and period 2. A reduced interest rate of 3% per annum will apply for period 3, which commences on the 1st of January 2023, on warehouse balances outstanding until the debt is discharged. Employers whose tax affairs are dealt with in Revenue's Personal Division or Business Division will have their EWSS overpayments warehoused automatically. Large Cases Division and Medium Enterprises Division employers can make an application to have their EWSS overpayments warehoused. In such cases, Revenue will make relevant inquiries and request supporting documentation to satisfy itself that a business is unable to repay its EWSS liability in making a decision to grant access to debt warehousing. Other tax payment and filing obligations must be kept up to date for the duration of the debt warehoused period and for any subsequent arrangement periods to guarantee the reduced rates of 0% in periods 1 and 2. And 3% in period 3. Failure to meet current tax obligations will result in the warehouse facility being withdrawn. Full statutory interest will be applied to the outstanding balance from the date of removal from the debt warehousing scheme. Moving on to the next slide, now that the scheme is well underway, Revenue will be reviewing this new real-time data received, identifying potential issues and contacting employers seeking clarity if required. If we identify high-risk practices, we will contact an employer directly to ensure eligibility and that the scheme is not being abused through the manipulation of payroll. It is imperative employers retain records supporting their registration and continued eligibility for the scheme for a potential review in the future. The next slide outlines the consequences of determination by Revenue of abuse of the scheme can result in complete exclusion from the scheme at an employer level, possible repayment of subsidies received with interest and penalties, and possible criminal prosecution. Finally, on the last slide, our website has a lot of additional information on EWSS, including guidelines which are updated as the scheme progresses. I would recommend that employers regularly access these resources to ensure you remain up to date. Thanks for your attention this morning.
Wonderful. Thanks, Colette. That was a great presentation. So next we're moving on to part 2 of today's webinar. And here I want to introduce you to new features that were released in both BrightPay and Thesaurus Payroll Manager a few weeks ago. A lot of what we do and a lot of the features that we introduce are about making our customers' lives easier. And you can clearly see this coming through in our new partnership with Modulr. Payroll software is used to calculate employees' wages, deduct the right tax and pensions, and communicate this information with revenue. You can also issue payslips to employees and create bank files to make the payments to employees. However, before now, when actually making the payment to employees, it was a very manual process with a lot of steps involved. And this is where our new integration with Modulr comes in. Instead of creating bank files, you can choose a new option to Pay by Modulr, giving you a fast, secure, and easy way to pay employees through both BrightPay Payroll and Thesaurus Payroll Manager. There's a number of benefits to this. It saves time, it's more secure, you can eliminate errors, and you can make same-day payments where you complete the payment request before 2 p.m. So rather than try to explain it to you, I want to jump into the software, and that will be a better way to explain how it works. And just to note, before we jump into the software, you do need to have a Modulr account set up in advance of using this feature, and it can take a couple of days to be fully up and running. So first I'll start with BrightPay, and then I'll show you the process in Thesaurus Payroll Manager. The first step is to run the payroll as normal in BrightPay, and when ready, click on Pay, and then choose Modulr from the drop-down. On the first screen here, you'll be given some information about what you can do with Modulr, and there's a link to sign up to Modulr on this first screen as well. I already have a Modulr account set up, so I'm going to click Continue. First, you will be prompted to enter your Modulr username and password, and once completed, click Sign in to Modulr. You will also need to authenticate your Modulr login through an app called Authy on your phone, and you will have already set up and installed Authy on your phone when setting up your Modulr account. You will get notifications on your device, and you simply need to click Approve as you would with logging into online banking. Once signed in, a match attempt will be made to your Modulr account using the employer registration number entered in your BrightPay employer file. Where a successful match is detected, your employer name will be displayed automatically, or if not, you can choose the employer name from the drop-down menu. When ready, click Continue. You will now see a list of your employees on screen, and the employees will only appear here if their payment method is set to credit transfer. You can also deselect any employees who you wish to exclude from the payment run. Over to the left, you can choose the account you want to make the payment from and enter the payment date. It's also recommended that you double check the IBAN is correct for each of your employees. And again, this information is taken from the employee's records. You can enter a payment reference if you wish. And finally, the payment amount for each employee will reflect the employee's take-home pay on their payslip for the pay period being paid. And you can amend the figure here if you wish. When ready, click Continue. A summary of your payment request will now be displayed for final review. And when ready to submit your payment request to Modulr, click Send to Modulr. Another Authy notification will be sent to your smartphone asking you to approve the payment request submission. And once approved, confirmation will be displayed on screen. The person authorized on the associated Modulr account can now log in to their Modulr portal to approve the payments. So this person could be the payroll processor themselves, maybe another person in the company, such as an MD or CEO. Or if you're in a payroll bureau or accountant setup, you could set up your clients so that they can log in and approve the payment request to complete the payment to their employees. So that's the process in BrightPay. Now I'm going to jump into Thesaurus Payroll Manager. And to be honest, the process is pretty much identical to the process that we just saw with BrightPay, so I may sound a little bit repetitive here. After updating your payslips as you normally would, go to Payslips, then choose Pay using Modulr. On this first screen, again, we will have an overview of Modulr with links to sign up and fields to enter your username and password. Like with BrightPay, you will need to authorize the login through the Authy app on your smartphone by clicking Approve. Once signed in, a match attempt will be made to your Modulr account using the employer registration number entered in your Thesaurus Payroll Manager employer file. Where a successful match is detected, the employer name will be displayed automatically, or if not, you can select the employer name from the drop-down menu. When ready, click Continue. We're through to the main screen now, and as you can see, it is pretty identical to the same screen in BrightPay. You can choose the account that you want to make the payment from and enter the payment date. A default reference of salary will be entered for each employee, but if you wish, you can change the reference by clicking on this field on the employee's payment line and enter your new reference, or you can enter a global payroll reference here to change the reference for all employees at the same time. Remember to double check the IBAN for each employee to make sure it's correct. Again, the payment amount for each employee will reflect the employee's take-home pay on their payslip for this pay period. And should you wish to exclude any employees from the payment submission, simply click on the word Yes here, and it will update the Include column to No so that they won't be included. By default, employees who have an end date within the pay period will be set to No, meaning they won't be included in the payment. But if you wish to include leavers, you can click on the word No to change it to Yes to include them in the submission. When you're happy that everything is correct, click Continue to proceed. A summary of the payment request will be displayed on screen, and when you're ready to submit the payment request, click Send to Modulr. An Authy notification will be sent to your phone asking for you to approve the payment request submission. And once approved, confirmation will be displayed on screen, and the person authorized on the associated Modulr account can now log in to Modulr to approve the payments. So that's just a very quick introduction to this new integration with Modulr. And I've included an email address for the Modulr team here who can help you with pricing, setup, onboarding, and support. And we do also have more webinars in December where we will have a guest speaker from Modulr who will go through how it works in a little bit more detail and answer any questions that you may have. So it's now time for the questions and answers, and we are delighted to be joined by Anne DeLay, who is Principal Officer in the Medium Enterprises Division and Business Owner of the EWSS at Revenue. Joining Anne today is Audrey Mooney, who is the Customer Support Manager here at Thesaurus Software. If you have any questions, feel free to type them into the questions box on your screen, and we'll try to get through as many questions as possible. So Audrey, I'm going to pass it over to you now to read out the questions.
Thanks, Rachel, and good morning, everyone. Okay, so the first question there is somebody's completing payroll next week for the last 2 weeks of November, and the EWSS subsidy is at the reduced rate, even though they're paying for the period the 14th of November to the 27th of November. So I suppose they want that explained. So Anne, feel free to come in, but I suppose it's always based on pay date, regardless of the earnings period. I don't know if you want to add anything to that, Anne?
Yeah, that's correct. So it doesn't matter when it was earned. If the pay date is in December, then it's the reduced rate of subsidy.
Thank you. A lot of people just asking about new hires. Can they avail of EWSS for new hires going forward?
I presume this is after the 1st of January and there's no restriction on new hires after the 1st of January, provided the employer was eligible and registered at the 31st of December.
Thank you, Anne. A lot of queries in for asking about the childcare sector. Just going forward, do they have to do anything different to what they have been doing? So just if there's any changes in relation to the childcare sector.
No, there's no changes with the childcare sector. They continue as normal.
Perfect. A lot of people also are asking about EWSS from January to April, just about the comparative period and anything. I suppose they're just looking for clarification on how it's going to work from January to April.
Yes, so the comparative period for January to April is the same as the comparative period for the second half of 2021. So it's looking at the full year of 2021 versus the full year of 2019. So if you're eligible on the 31st of December 2021, then you're eligible up to the 30th of April 2022.
Perfect, thanks for that confirmation. So the next question there is, with regard to the eligibility review to be submitted by the 15th of each month, is it still the same for the 15th of January to have submitted actual December 2021 figures, as our final December figure may not be completed until after this and may be different to what is submitted?
Yes, it is to be done by the 15th of January. If there are amendments to be made after, you can make contact through my inquiries, but it is the 15th of January is the deadline, and if payment or if the ERF isn't submitted by that date, then payments could be ceased. Just to clarify, Audrey, on the childcare, the childcare are going to be treated no differently to anybody else, so they will see the reversion back to the two rates from the 1st of December and the flat rate then in 2022. It's just that they don't need to do anything extra to avail of those rates.
Perfect, thank you. Okay, so no extension for the Christmas. Perfect. So somebody's just asking then, where a refund of tax is being paid to an employee, how will this be handled? So I suppose tax refunds or bills don't come into EWSS at all. It's all to do on the, the actual payment you're making to an employee. I don't know if you have anything to say on that, Anne.
Yes, that's correct. It's just based on the gross pay, which is irrelevant. The tax payments that are being paid to employees as part of the net pay rather than the gross pay.
Thank you. I suppose a couple of people just asking, do you expect the government to make changes to the rates in light of the new restrictions? Have you any inside knowledge, Anne?
Unfortunately, I don't. I know it is something that he is keeping under constant review, but I don't have any additional information on it other than he's monitoring it.
Yeah, perfect.
I think everybody would like to see that clarity, Audrey. I think Thesaurus as well as ourselves. So we have made that point that if there are changes, we do need early sight of them just to ensure that everybody has time to implement the changes. But we haven't heard that there is going to be any change.
Yeah, definitely. Notice would be good with the new tax year looming as well. Yeah. Okay, this next question, I'm not sure if I understand it, but somebody's just saying, if in November they put in an amount that is too high, should they correct it in December? For example, if I put in 100 in November, where should I put in 80? Should I put in 20 less in December? So I've kind of read this as overpaying an employee, but maybe I'm totally wrong. But I suppose I would say if you actually overpaid an employee, yes, then you would just deal with that as an overpay. It's not a correction because it is what you paid them. So yeah, just agree with the employee then how to take that money back. Or do you think it means something else, Anne?
It could mean that the turnover that was input for November was overstated. So in a situation like that, you should go back and contact revenue and we'll amend the payroll, or sorry, apologies, we'll amend the figure that was input for turnover for November to make sure that it is correct, and then you'll put in your correct figure for December. So if that's what it is, if the error is in the input of the actual turnover, then you need to contact us and we'll amend it.
Okay, brilliant, thank you. Somebody's just asking, where on ROS can they see a listing of EWSS payments made to an employer?
I don't know the answer to that. I'll have to check that and come back to you.
Perfect, okay. Somebody's just asking then, if you become eligible for EWS again, do you have to fill out the full year's turnover for 2019 and 2021 in revenue or in ROS, or do you just fill in from the month you become eligible again? So this is for re-registration of the EWS.
You'll have to give all the details again because, well, all the details would have to be provided when you go in because we still need to know your actuals for the months that you were deregistered to make sure that when we look at the year as a total that you're not breaking the 30% threshold.
Okay, great, thank you. Okay, so, again, just asking about January to April, but I mean, I think you've covered that. Sorry, somebody's just asking, can you start to claim EWS during a month? If you can claim in the middle of a month and have never claimed before it, do you need to fill out the EWS form before you do?
Yes, you will need to fill out the EWS form because if you're starting in the middle of November, you need to have done an assessment at the end of October to make sure you're eligible for November. So that's why we ask that it's done by the 15th of November. So you can start claiming in the middle of a month, but you do need to input the details for the previous month. Does that make sense?
Yep. Somebody's just asking, will all tax liabilities outstanding at the 31st of December be included in debt warehousing automatically for all small and medium businesses?
The debt warehousing covers Prem, VAT and IT. So I know the Collector Generals are making contact with people who are in the debt warehouse around what is included and not included. So you will be getting correspondence from the Collector Generals in the next 6 weeks just around that particular point.
Okay. Sorry, I lost track of that. Okay, so somebody's just asking, can a director who was on PUP now go on EWS? He was on payroll in January and February 2020.
So if he meets the criteria of proprietary director that was paid between July 2019 and June 2020, then it looks from the information that's given there like he would qualify for EWS.
Mm-hmm.
It's very difficult, you know, to give an absolute definitive answer in situations like that because every situation's kind of unique and but from the brief information that's there, it does sound like he will qualify.
Perfect. Somebody's just asking, if you pay fortnightly and suspect mid-month you may no longer be eligible for EWS, should you prepare an ERF and deregister mid-month as opposed to the first day of the following month?
Yes, once you become aware that you're not going to be eligible because in the middle of the month something happens that makes, you know, maybe you want to be contracted and you know that you're not going to be eligible, you're supposed to stop claiming at the time. You should know you're not going to be eligible. So yes, in a situation like that, you should stop claiming straight away and deregister straight away.
Okay. Somebody's just asking, is it possible to amend previous month's turnover figures on the EWS eligibility submission? They're still well under the threshold, but notice a turnover error for an older month.
Yes, it's not possible to do it yourselves. You need to contact us through My Inquiries and we'll amend it for you.
And somebody's just asking, do you have to continue to fill out the ERF for February, March and April?
No, because the eligibility is based on 2021 versus 2019, so we won't be requiring turnover details for any month in 2022 because it's not taken into account in your eligibility.
Perfect, thank you. Somebody's just saying, can we confirm that the PRSI credit attached to EWS is finishing on the 28th of February 2022?
Yes, that's correct. It's finishing the 28th of February 2022 and it'll revert back to normal PRSI rates from that date.
Thank you. Somebody's saying they completed the EWS checker on time each month, but failed to tick the EWS box on their payroll software. I then received a notice that I had been deregistered. I've now re-registered for EWS. Can I claim back payment for the months I failed to tick EWS on my payroll software?
I think that person should maybe contact me directly, and I'll just take a look and see what happened. And we'll, it'll be based on whatever happened as to what we can do in that situation.
Perfect, thanks, Anne. Somebody's just saying, I'll be availing of EWSS for the remainder of 2021. Do I need to re-register for 2022? So I presume that'll carry over, will it?
Yes, that's correct. It'll carry over. There's no need to re-register.
Perfect, thank you.
Actually, the registration portal for EWSS will be closed in 2022 and possibly towards the end of 2021, just to stop new employers registering.
Okay. Sorry, there's a few, I know, Anne, you've covered this already a couple of times, but a few people still asking if you can clarify January to April 22.
Yeah, so at the moment, the eligibility criteria is based on a 30% reduction between 2021 and 2019. And that is also going to be the eligibility criteria for 2022. So it basically means that if you're eligible towards the end of 2021, because your calendar year 2021 is 30% less than calendar year 2019, then you're automatically eligible for the first 4 months of 2022. There's no new eligibility test being introduced for submissions in 2022 to be based on the same test that's there now.
Great, thank you, Anne. Somebody's just asking, what's the process to deregister for EWSS?
You go into My Registrations on ROS and you can click deregistration through as part of that portal.
Thank you. Okay, so somebody's just saying there were and are delays getting PPSN numbers from social welfare. Employees paid emergency tax at this time. Can EWSS be backdated when PPSNs are made available?
I know there is a way of actually submitting payroll for individuals where there is no PPSN included, and EWSS can be claimed as part of those payroll submissions. If it's a particular situation where I think contact should be made directly with ourselves through My Inquiries if there are particular instances, and we'll take a look at them then.
Perfect, thanks, Anne. Somebody's just asking, can a sole trader claim EWSS?
There's no employer-employee relationship between a sole trader and themselves. So if there isn't an employer-employee relationship, you can't pay wages to yourself. So on that basis, you can't claim a subsidy on wages that aren't actually paid. So the answer, the short answer is no. That was the long answer.
Thanks, Anne. Somebody's just saying that they noticed an employee was to be refunded by revenue when they were printing the payslip, and they paid this money to the employee. How do they recoup it? So I suppose their monthly return is reduced by that figure, and so I suppose they're acting really as an agent on your behalf, but then their liability is reduced by that same figure.
Yes, that's correct. Their prem statement in for that month will have that taken into account. So it'll be netted off against the liability that they owe in respect of other employees.
Right, there's just somebody saying that the onboarding process with Modulr is taking quite some time. So I don't know if we can feed that back to Modulr. They've been trying to set it up since the 9th of November.
Yeah, I've actually messaged that person just to contact me, and I'll get in touch because it should only take a few days. So I can escalate it.
Perfect. I think I'd like to get that feedback. Yeah, thank you. So somebody's just asking if they qualified for subsidy in January 2021, but they've stopped claiming since November. Do they need to register for the subsidy for January?
Well, if they stopped claiming in November, it looks like they're no longer eligible. So if they're not eligible at the end of the year, then they can't just come back and register for January 2022. you have to be eligible at the end of December 2021 to be able to claim for 2022.
Yeah, because it's the same period. Yeah, a few questions coming in on that. If you registered for December 21, can they register again for January to April? So you've just covered that, and thank you. Somebody's just saying, if at the end of the year it shows that you went over the 30% threshold, what happens regarding previous payments received? And does it mean then you're not eligible for January and February 2022?
Yes, it does mean you're not eligible for January, February 2022 because it shows that you didn't have the 30% drop for the full 12 months of 2021 versus 2019. And in situations like that, we are actually going to go back and start looking at people who broke the 30% threshold in December, just to make sure that it is actually just as a result of something that happened in December and wasn't that actuals or even projections were understated in earlier months. So I think someone needs to take a look at it and try and understand why it's only in December that the threshold was breached. If it's for genuine reasons, because it was a bump for December that wasn't expected, then it's fine. But if, you know, was because their projections were understated and they should have known they were understated, then they should really go and repay back the subsidies that were claimed for earlier months.
Okay, thank you. Somebody's just asking then, can you confirm the last date to re-register for the scheme if you've already deregistered?
You can only re-register for the scheme if you're eligible. So again, if you've deregistered, it's because you're not eligible. So you can't just decide to re-register. You can only re-register if you're eligible. It hasn't been fully decided yet when the automatic re-registration will occur. We'll also be looking at employers who re-register and claim in 2022, you know, when they've re-registered towards the latter part of 2021, just to ensure that it is a genuine person who has met the qualifying criteria in 2021 to allow them claim in 2022.
Perfect. Thank you. Someone's just saying, has the percentage paid back to the employer remained the same? Please confirm the percentage for the childcare sector. So I suppose there's no percentages, they're all rates. I'm not sure if you can take anything else out of that question.
Yeah, so it is all based on rates. Sorry, yeah, it's between 150 and 350, and it'll go down to 150 and 202.99 based on the slides. The details are on the slides. That's from the 1st of December, and it'll be a flat rate of 100 then from March 2022. And there's no difference between the childcare sector and other employers who are claiming EWSS.
Perfect. Okay, I feel we've covered most of the questions. As I said, there's a lot of repeat questions, and I suppose there's one or two that are very, very specific, and I think it's best if they contact revenue. You know, it's just a little bit difficult to interpret some of those specific questions, you know, on a webinar like this. So I think we'll finish up there. Thanks, Anne.
Wonderful.
That's great. Thank you.
Thanks, Audrey, and thanks, Anne, for joining us for the questions. Now we do have Paul on here as well, and I think Paul just wants to give us a quick update on the Modulr side and just how it's worked for him. I'm not sure if you're there, Paul. No worries, he may have had to leave. But yeah, we can finish up there for today. And as I said, we will send out a follow-up email later today with a link to the recording of the webinar and a copy of the slides as well. So thanks everyone for joining us, and we hope you found it useful. Thank you. Bye.
Thanks. Bye-bye.